What you witnessed on Friday, January 30th, 2026, was not a market correction. It was not profit-taking. It was not a natural economic event. It was a crime scene. If you were watching the charts on Friday morning, you saw something that defies the laws of supply and demand. You saw silver trading at $121 an ounce, an all-time high. The momentum was unstoppable. The shorts were bleeding. The banks were trapped. And then, at exactly 8:30 a.m. New York time, the trap door opened. In the span of 6 hours, silver crashed 25%, gold plummeted, erasing nearly $3 trillion in market cap. It was the single most violent downside move in the history of the precious metals market. And while the mainstream media, CNBC, Bloomberg, the Wall Street Journal, scrambled to find a reason, blaming strong dollar or Fed signals, the real story was happening in the dark corners of the derivatives market. This was a raid, a coordinated algorithmic high-frequency attack on the Comex futures market designed to do one thing: save the bullion banks from a $20 trillion annihilation. To understand why this happened, you have to understand the paper Ponzi. For every ounce of physical gold and silver that actually exists in a vault, there are hundreds of paper ounces traded on the exchange. These are futures contracts. They are bets. They are not metal. For years, banks like JPMorgan, Citi, and HSBC have sold these paper contracts to suppress the price. They create paper silver out of thin air and sell it into the market to absorb demand. It's like counterfeiting, but legal. But in January 2026, the game broke. Physical demand for silver exploded. Solar panel manufacturers, AI data centers, and the military exhausted the global supply. The physical vaults were empty. The registered inventory at the Comex, the metal actually available for delivery, dropped to levels we haven't seen since the 1970s. The banks were naked short. They had sold metal they didn't have. And as the price rocketed past $100, they were facing margin calls that would have bankrupted them. We are talking about potential losses exceeding $20 trillion across the entire derivatives complex. So they pulled the nuclear option. They raided the price. How do you crash a price when demand is at an all-time high? You use leverage and rules. First, the CME Group, the entity that runs the exchange, raised margin requirements. They hiked the margins on silver futures by 47% overnight. Think about what that does. If you are a small trader or a hedge fund or a family office and you are holding long positions in silver, suddenly your broker calls you. Igwe, you need to post 47% more cash right now. You don't have the cash. So what do? You have to sell. You are a forced seller. The banks knew this. They triggered the margin hike to force a cascade of liquidations. They forced the longs to sell, creating a wave of selling pressure that had nothing to do with the value of silver and everything to do with the mechanics of the casino. Then they unleashed the algorithms. Analysts at Citigroup openly admitted to seeing outsized flows of selling. We are talking about billions of dollars of paper silver dumped into the market in milliseconds. Who has the liquidity to do that? Only the bullion banks. They sold paper contracts into a vacuum. They smashed the bids. They triggered the stop losses of every technical trader in the world. And just like that, the price collapsed. This was a rescue operation. The banks rescued themselves from their own bad bets by nuking the accounts of retail investors. But here is the Markology truth that they don't want you to know. The physical market did not crash. Try to buy an ounce of silver right now for the spot price you see on TV. Go ahead. Call a dealer, go to AppMex, go to JM Bullion. You will find two things: out of stock, premiums that are 50% or 60% above the spot price. The spot price and the price discovered on the Comex is fake. It is the price of a paper receipt that nobody trusts anymore. The street price and the price to actually hold the metal in your hand is still hovering near the highs. This is called the Great Divorce. It is the moment when the paper market and the physical market separate completely. It happened to nickel in 2022. Now it is happening to gold and silver. We are witnessing the death of the Comex. The exchange has lost all credibility. Miners are refusing to sell at these fake prices. Refiners are bypassing the exchange and selling directly to Apple and Tesla. The price discovery mechanism is broken. So why should you care? Because this meltdown is the final shakeout. Every major bull market in history has a flush before the parabolic move. In 2008, gold crashed 30% during the Lehman crisis, only to triple in the next 3 years. In 2020, during the COVID crash, silver fell to $12. 6 months later, it was $30. The banks raid the price to clear the board. They want to shake you out. They want you to panic sell your position so they can cover their shorts at a lower price. They are desperate to buy back the contracts they sold. If you sell now, you are handing your wealth to the very people who rigged the game against you. This $20 trillion meltdown is really a transfer of wealth. It is a transfer from the paper hands, speculators using leverage, to the diamond hands, investors holding physical assets. Let's look at the Microsoft factor. On the same day as the metal crash, Microsoft stock tanked 12%. Why? Because they were removed from Morgan Stanley's top picks list due to rising AI costs. This is connected. When the stock market wobbles, hedge funds get margin called on their stocks. To raise cash, they sell their winners. And what was the biggest winner of January 2026? Gold and silver. So liquidity was drained from metals to pay for the losses in tech. The banks used this liquidity crisis as cover for their raid. They knew the market was fragile. They pushed it off the cliff. But look at the fundamentals. Has anything changed? Did the U.S. debt go down? No, it's still $38 trillion. Did the Fed stop printing money? No. Did the geopolitical tension in Greenland or the Middle East vanish? No. Did the supply of silver suddenly increase? No. It's getting scarcer every day. The fundamentals are screaming higher prices. The technicals are screaming crash. Whenever fundamentals and technicals disagree, trust the fundamentals. Technicals can be rigged. Fundamentals cannot. You cannot rig a shortage. Eventually, the factory needs the metal. Eventually, the solar panel needs the paste. And if the metal isn't there, the price goes to infinity. We are in the squeeze of the century. The entities squeezing the market aren't Reddit traders. They are BRICS nations. They are central banks, China, Russia, India. They are buying physical gold and silver by the ton. They don't care about the Comex price. They are draining the vaults. This raid on Friday was the Western banks trying to hold back the tide, but they are fighting gravity. So, what is the strategy? 1, ignore the spot price. It is a psychological weapon. It is designed to make you feel fear. Do not look at it. Look at the inventory levels. Look at the premiums. 2, do not use leverage. The only people who got hurt on Friday were the people trading on margin. If you own the asset outright, you didn't lose anything. You still own the same number of ounces. The fiat value fluctuates, but the weight is the same. 3, buy the panic. When the banks raid the price, it is a gift. They are putting the only real money on sale. Donald Trump knows this. Why do you think he is talking about a strategic Bitcoin reserve and auditing the gold at Fort Knox? He knows the paper system is fraudulent. He knows the derivatives market is a ticking time bomb. He is preparing for the reset. When the Comex finally fails, when a major entity demands delivery and the vault is empty, it will declare force majeure. They will settle the contracts in cash. They will say, sorry, we don't have the gold. Here's a check for the paper price. If you are holding a paper contract, you get worthless paper dollars. If you are holding the metal, you name your price. That is the end game. The $20 trillion meltdown wasn't the end of the bull market. It was the signal that the system is cornered. The banks are thrashing. They are desperate. Do not let them scare you out of your position. The Comex is bleeding. The vaults are drying up. The paper game is ending. The raid was their last stand. Now the real move begins. I will keep tracking the registered inventory numbers. I will keep tracking the margin changes. This is financial warfare, plain and simple. Pick your side, paper or metal, bank or self. Subscribe to the channel. We expose the rig. We follow the physical. I'll see you in the next video.